Hello, everyone. Welcome to our webinar. This is Elisa Baum, Director of Product Marketing for GridGain Systems. We'll begin in just a second, but I just need to conduct a little bit of housekeeping. If you could please raise your hand using the GoToWebinar hand raising feature in the panel, that would be great. That we all know that you're hearing me okay. So if you could please do that, great. Thank you so much. Next, during this discussion, you will be on hold. And should you have any questions for the speaker, please go ahead and enter them in the GoToWebinar questions panel. At the end of the discussion, we'll take as many questions as we have time left. And also, I would like to just let everyone know that I will send both the slides and a link to the recording after the event. With that said, I'd like to thank you for attending today's webinar, Powering Financial Spread Betting with In-Memory Computing. It's being presented by industry consultant Eric Hartman. And with that said, I will turn the floor over to Eric. Go ahead, Eric.
Thanks, Alyssa. Good afternoon, good morning, good evening to everyone, depending on which time zone you reside in. Hello to you from New York City. That's where I am calling from right now. So what we'll be doing today is to continue our series from GridGain in-memory data fabric, introducing our product, introducing our technology, as well as showing you real examples where this technology can be applied. I concentrate in financial services, where I've spent more than 25 years covering trading of various assets, covering risk management, compliance, pricing, many other aspects within financial services. So I'll be happy to provide you my view on various topics in this series. Today, we're going to be covering spread betting. Right? This is a very interesting topic to me for a number of reasons, and I'll explain in a second. So for many people, well, some people are very familiar with spread betting, other people are not so familiar, and this is due to the fact that this phrase spread betting is mainly used in the UK or some of the jurisdictions where this is allowed as a sort of a gambling type of situation where you can leverage larger margins and provide bets on different events as they occur, sporting events, any kinds of events that may occur in the market for which there are two sides willing to provide bets, right? What is important here is the spread betting is also used in many other aspects of financial services and related industries. And that's what mainly I'm going to be talking about today, covering those aspects of spread betting, while the concepts that we'll talk about today can apply to any industry where this concept is being used. So spread betting is simply will allow you to speculate on whether the price of any asset will rise or will fall, and you can gamble on everything from what the outcome of the sporting event is going to be, to how the stock market is going to close today, or what the house prices are going to, what's going to happen with house prices in the near future, or whether the announcement is made in a certain way, or you can bet on who is going to win the presidential election in the US next week. There are many different ways you can bet with people, against different houses that will also be willing to take a side. And it's an interesting market. It's very, very popular in the UK. As you can see from my quote here, more than 1 million of Brits have opened a spread betting account by now, and that's a large number. Also, spread betting is growing. According to Trade Fair, one of the largest betting companies in the UK, they estimate their growth to be about 20–30% every year for the last 10 years. And like I said, this is one of the largest ones, so this probably indicates the overall industry growth of this concept. So again, like I said, you can do many different things with it. You can any kind of market movements, any kind of currency expectations within short period of time, within longer period of time. There are all kinds of possibilities where you can exercise the spread betting concepts. Basically, how it works is that the spread betting firms offer you a quote which consists of a bid and a slightly higher offer price. And then you can choose to go with one side or the other, and you don't have to worry about owning any of the underlying assets onto which you bet. Just the outcome, just what the movement of that is going to be, and whether you hit a certain threshold or not, right? So because of that, um, it's a quite risky proposition, but also quite advantageous proposition. But before we go into the advantages and disadvantages, I just wanted to give you an example, a real-time example that I put together just to illustrate how this can be used in financial services reality. For example, one of the most popular markets for financial spreads betting is the FTSE 100, right? We all know it's a European index of 100 top stocks traded, and it's a leading indicator of how the market is, performing in Europe. So, for example, one day earlier this year, World Spreads, which is one of the largest, spread betting venues, was offering a spread of 44.11 to 44.12 on this blue chip index. If you thought that the FTSE would rise that day, you would buy it at 44.12. As the world spreads market for the FTSE closed at 44.35, and if you bet £1 a point, you would have received 44.35 minus 44.12 multiplied by your stake. And with £23 of winnings in your pocket, you could have shot. However, if the FTSE has dropped, you would have owed the money, and your losses would be about £1 for every point it dropped below 44.12. As you can see, that the downside is that if the FTSE fell below the level of what was provided to you, only rally strongly in the afternoon, you would have lost out of any possible winnings. So basically, it's, as you can see, it provides you opportunities of making a lot of money, but it also provides you possibilities of losing a lot of money, everything, right? So there are ways of limiting your losses, and we'll talk about it soon thereafter. But you just have to remember that you are betting, and bets are dangerous. But there are clearly advantages to spread betting. And this is the reason why it becomes so popular and why it's growing with such increasing numbers every year. Well, there's definitely tax preference, right? In the UK, you don't pay any capital gains on the profits received, and that's very lucrative. Where you would have had to pay if you actually bought futures or the underlying stock itself that makes up that FTSE index. You would have had, and then you made some money there. There's significant taxes in the UK, and so you would have lost a lot of money, even though you've made money on your bets. There's also low cost of entry, right? Whatever you want to put in, there's really no minimum stakes allowed, like in the more regulated markets, where you have to buy a minimum of 100 contracts or 100 shares. So here you can just bet $1 if you wanted to. There are low transaction costs, right? So you're basically only paying for the spread, right? That's all the commissions, all your risks, everything is included in that spread. Whatever you see is what you're buying that side of the market for, right? So obviously, since you don't have to pay any commissions, that also creates an interesting environment where people are easier willing to try this out. There are relatively low margins because you can risk lower amounts of money, so you can there's a little of margining that will be provided to you. As I mentioned, there could be smaller sizes of trades related to uh, the low cost of entry, as you can trade real small amounts if you wanted to. No direct commission. We already covered this in the low transaction costs. Um, Large upside potential. I just mentioned that to you also, that it's possible to make big profits with relatively little investment, providing that you understand the risks. Also, it's a 24-hour market, more or less, right? So there's no limitations like we have in the stock market between 9:30 and 9:30 a.m. and 4 p.m. Here you can come in at any time, you can exit at any time, you can see the prices in real time, you can trade at any time. There's relatively less regulation because those are not assets that are regulated by FSA or by any of the SEC in the States or any of the other commissions, because they're not really considered to be per se financial products. So because of that, normally there's less scrutiny, less regulatory reporting requirements, and all of that equates to, again, lower transactional costs in our cases. There's more diversity. What do I mean by that? Well, as I can say, like I said, that practically any kind of event you can think of, and an outcome of that event can be made into a product that's traded on in this markets in the spread betting fashion. Right. So because of that, you can create, or you can think of different correlations between different assets, different ways that you think because of one event, occurrence of one event, there may be a dependency on occurrence of another event. So you can create your own strategies. You can create your own ways of utilizing this market with the diversity that you are comfortable with. Also, you may want to use diversity for risk management and other hedging strategies. You have access to a large range of markets again, right? So you can have financial bets, you can have sporting bets, you can have weather bets, you can have housing bets, you can have events and news outcomes bets. There's lots of different products to create from the world. There's a single account for all of those products. You don't need to worry about commingling funds, different firm accounts that you would have to open. A single account will give you access to a lot of those products. All of those platforms are fully electronic, meaning that you don't have to go see a broker, call anybody. Everything is available on the screen. You can place your bets on the screen. You can receive your profits or pay your losses right electronically right from the screen. Most of the platforms also provide mobile trading options where you can use your smartphone or any kind of mobile device to connect to those markets and perform there. 24/7, again, because there's no timing restriction, so you can basically trade anytime you wish with this technology that's available to you. And I mentioned automatic stop losses, so you could specify certain limits, and that's how you mainly limit your losses within this market. You can say, well, if I see that the index is falling below a certain level that I'm comfortable with, I want to stop. I want to, sell. I want to get out of this position. All right, so you don't have to wait until the end of the day or whatever your duration is of your bet. If you feel that it's moving really sharply against you with no possibility of coming back, or at least you don't know whether it's going to come back or not. And then because of that, because of a variety of different products and because of different stop losses you can put in on different levels as the index or the information is changing, You can create multiple trading strategies that will help you to, again, be comfortable with limiting your losses and uh, upgrading to larger potential upside potential. But like I said before, it's a very risky business, right? So one side, yes, advantages that we just covered, and that's why it's growing, and that's why people wanted to try it. But it's also a risky proposition. And that's where I wanted to spend a little bit of time of explaining what I mean by risky versus riskless. It's going to help us to understand later why technology is going to be critical here to limit the amount of risk that we're comfortable with. So when we deal with financial markets, more traditional financial markets, we usually talk about market makers that maintain spreads, that will offer both sides to an asset to buy or to sell. Um so it's a risk. It's somewhat of a riskless business because there is always somebody on the other side that's willing to step in case of a asset really falling sharply or any other condition. With spread betting, you have a concept of a bookmaker. Bookmaker, first of all, is trying to make money for himself and doesn't really care that much about the market. So it's like you're in a casino when you're playing against the house, right? So it's very similar here. There's no real control, no real obligation for a bookmaker to step in and to help you out in case of an erroneous bet or market moving sharply against you. Also, within structured financial services markets, we have financial authorities. I mentioned FSA, BaFin, SEC, depending on the jurisdiction in which you operate. With spread betting, there's no financial authority per se. It's only like regular consumer goods types of regulations where yes, fraud is not allowed or certain activities may have to be prohibitive because of age or because of some other limitations. But other than that, you're basically on your own with no financial authority to back you up. Bid offer spreads exist in both businesses, in the more traditional financial services business, as well as in the spread betting business. But obviously the bids offer spreads are significantly different, right? So they're offered in normal, if you talk about liquid, more controlled, more regulated market, obviously you should expect to have a narrower bid offer spread than you do in many of the riskier transactions like the spread betting. Leverage transactions also there's usually a margin that's provided to you by the broker in a traditional financial services business and in the spread betting business. But again, it all depends on the house, and with spread betting, usually you can get much more leverage, but you also can lose a lot. Suitability test, this is something that's been introduced relatively recently to sort of also provide additional support for customers as basically a bookmaker or a house with which you're engaging in a spread betting activity has to notify you of certain risks, has to find out if you can afford those risks. So they have to do certain tests. They're not very extensive, but there's certain a couple of questions, couple of checks that they need to do to make sure you're suitable for this type of activity. Also, in spread betting, we often talk about overnight financing, right? So this is a significant profit that a house makes by providing that overnight financing to you, because you're supposed to be flat at the end of the day, and if you are losing because of the market is turning against you, and you need to replenish your finance, you replenish your account. They do provide you overnight financing with significantly higher rates than what you could find anywhere else. And that's where this is an additional source of income for spread betting companies. Volatility is quite high, much higher than in some of the other markets. Well, as you can imagine, that it's a bet, so betting is normally carries with it a high level of volatility that you can expect to have. There's prices changing up and down depending on some of the other events, depending on how closer to the end of the event you're coming to. But you can hedge, and so you need to look into how one instrument is depending on another instrument, how one product that's offered to you by the spread betting business is related to others, so you can build some kind of hedging framework to successfully limit your risks, or to at least to know what is going on and how to manage, measure, view, and protect yourself. Modeling is quite important here, as there are mathematical models, probability analysis, all kinds of statistics related, regression related models that are made here to really predict the outcome of your bet, right? Because one thing is if it's truly random, which probably is not in this case, because you do have external events that may also relate to the outcome of the event onto which you're betting. So you have to build very complex models and mathematical equations that will help you to analyze, analyze the outcome or the probability of a certain outcome of this event based on the other related events. And well, to build that model, you need access to data, right? Access to information. That's where you're going to be also subscribing to information of other events, maybe events from the market data from financial services markets, maybe events from other spread betting venues, that may allow you to bet on the same product, or maybe data from other spread betting venues that provide other products, but you may figure out what the relationship and how to mathematically compute that relationship between those other products and the product onto which you're betting. And transparency is also not clear with spread betting, as you see, you can see basically the bookmakers' prices, but you don't know what other people are betting. You don't know, there's no real clear reporting requirements like you have in a more traditional financial services business. So you can just rely on maybe your own calculations that you make using models, using mathematics, using data analysis of some sort, versus what you can see in the open market with this particular spread betting venue or a different one, and the spreads and what levels they offer there. Also, we have new compliance requirements that kicked in that also now cover anything where money is being exchanged. So there are still anti-fraud, anti-money laundering, know your customer regulations that do kick in, not to the same extent like registered financial services markets, but still there is a requirement of doing certain due diligence when servicing clients within the spread betting business. And finally, technology, right? So technology is the key here, as I believe that that's where the difference comes in between a good system and not so good system that you'll use for spread betting. Because you want something to be fast, you want something to provide you information, you want something to show you as many products as possible and allow you to trade them with one account. Technology needs to be scalable enough. There needs to be provide what-if analysis, risk management, hedging, most of the volatility analysis, most of the other concepts that we just covered here. Traditionally, spread betting had depended on a lot of technology, and this is not just for the spread betting venues per se, the bureaus, but also for participants of spread betting. Right? They need to know. Um, they need to have information. They need to know how to interpret events outside of the bets, outside of the bids ask spreads of the spread betting venue. You need to analyze a lot of data, right? That means you have to subscribe to real-time market data. You have to subscribe to events as they happen, news. So for that, you really need some kind of big data or historical data repository, which gets updated with every tick of new data that's coming in. Technologies like Hadoop with MapReduce had traditionally been used effectively with big data, larger repositories, and analytics on that data. So that's something that I see many people using. Also, complex event processing is quite an interesting technology that's being used a lot in spread betting, where you need to build your model in such a way that as you're receiving ticks from multiple streams, from multiple event lines, you'll update your model, right? I mentioned to you that there are certain mathematical regression models that are being used. And with this is they get updated, the ratios get changed, the parameters get changed based on what is happening in various markets and how that relates to the overall model, right? So that's quite an effective algorithm that's being used for spread betting pricing and analytics. Robots are being used, right? Because you may want because it's all driven by technology, the bets, the bid spreads. So you can actually build your own algorithms or your own robots that will go in and, depending on a certain level, depending on a certain outcome of other events, buy or sell and buy and sell at certain levels, to sort of play with the bookmaker based on the information that's received in an electronic format, because you want to bid everybody else who may be also betting on the same asset by providing your own mathematics and acting faster than others by taking advantage of more manual processing of data by other people. News. There is this concept called sentiment analysis, right? So you need not only you need to analyze the news, but you also need to know how the news will play in the people's opinion and how that change in opinion will probably translate to buying or selling of the bets in this spread betting environment, right? So you have to again analyze historical patterns, analyze opinion of people about a certain news, and then also build quite extensive mathematical models to understand with every new news tick or information coming out, how would that probably affect the bid-ask spreads of the asset for which you're betting. As I mentioned, the latency and speed and performance of those systems is quite critical, as you have to be able to interpret a lot of data and in real time, and then make an action also based on that real-time information. Also, online and clouds are quite big in the spread betting industry, as they are, as you can see, mobile and internet-based platforms that only allow electronic traffic to come in and operate with the system. So obviously, this becomes a multi-hosted cloud-based implementations for people to connect and transact. Mobile trading, as I mentioned, most of those platforms do also allow for mobile trading access, and this is an important aspect of where things are, and how the mobile trading is also operating in a high-performance mode by accessing data and information within the parent platform. Also, because there's lots of different assets to trade and different products and diverse product base, basically, we need to utilize some uh, additional high improved performance mechanisms such as data partitioning and parallel processing clusters, for example. Right, so most of those systems, they are using that type of partitioning, those types of parallel processing clusters in order for effective access to the data by multiple people and supporting those transactions 24 hours, 7 days a week. Scalable data architecture, right? Again, if we have an increased number of users coming into the system, we may need to increase processing power, increase amount of memory that's being utilized to process people's queries. So for that, you may want to also you don't have time to upgrade to a larger server, but if you are using a cluster of some sort, you may easily add in an additional computer into the cluster, and this way you can scale up. And that brings us to a concept of in-memory computing, because if you think about it, a lot of issues that we just covered, a lot of problems, a lot of challenges, they can be, at least from the technology perspective, they can be overcome within memory computing. So now is the time to talk about in-memory grid computing. This is a topic very dear to us, as we believe we are one of the pioneers and best implementers of in-memory grid computing systems. So why today? Why now? What are the advantages of this? Well, obviously, in-memory computing means that we are moving 100% to in-memory processing, RAM. As you can imagine, this is significantly faster, hundreds of times faster than a traditional disk-based approaches for processing data. We also leverage clustered memory and parallel distributed processing. This rings a bell from a previous slide, as people need to actually cluster different elements together and process data in parallel fashion to guarantee minimal performance effect, regardless of how many people are connecting at the same time for placing those transactions, for analyzing the data, for risk managing data. All of that requires significant amount of processing power, and therefore this is, we believe, is one of the best approaches available by clustering memory and providing parallel distributed processing. It's also a good way to guarantee highest availability levels that are also required for anything that's related to financial assets or financial transactions. We have a lot of financial customers using this technology, and this is just some of the examples I put together of some of the customers currently using us. They use them for more traditional financial processing and financial analytics, but all of those cases that we can see here: trading platforms, risk management, financial analytics, big data analytics, compliance monitoring, software as a service platforms, all of those areas can be very well applicable to spread betting, because of the reasons I mentioned, that we actually we do provide technology for the actual trading platforms, where a lot of transactions need to be processed in real time at the same time. We also provide a good framework and good technology for modeling and for limiting risk and for pricing different instruments, for collecting information from multiple markets. That's where financial analytics, risk management, and big data analytics come into play, as well as compliance and monitoring, where, as I mentioned earlier, that we care about, fraud, AML, KYC, all of those concepts that were recently introduced into spread betting. They are good use cases for us where customers are using our platform for that, as each transaction is being checked for for fraudulent behavior, for any kind of lists, cross-checked with any kind of lists of prohibited individuals or corporate entities. All of that is available, you know, with our customers using our platform and providing good feedback to us. Just wanted to mention maybe one use case, which is one of our largest clients, from one of our largest clients, Burbank, which is also happens to be the largest bank in Russia and Eastern Europe, and the third largest in Europe, where they actually were faced with a similar problem that is known to us from discussing spread betting, right? You are switching from, or they were switching from a more traditional brick and mortar type of setup where they had offices and people would come into the offices, stand in line, and process their financial transactions in a manual fashion. And those offices were open between, I don't know, 10 o'clock in the morning and 8 o'clock in the afternoon, in the evening. And so that's when you had to worry about processing a limited number of transactions. And then, over the years, over the past, I don't know, 15, 20 years, whatever, they actually switched to a new world where they have online customers, where they have mobile customers, and everybody is transacting in real time with the bank. And we're talking about millions, I believe, 130 million customers of the bank, which are transacting often in real time at any time of the day. So it's very difficult to predict the flow of requests and data as because it comes in, and they felt that the traditional disk-based architecture and traditional database architecture was slow and couldn't guarantee the agility that they were looking for in introducing new products and servicing clients in the most in the most friendly way for the customers. So they were looking for a different technology to replace it, and they analyzed, they've evaluated more than 10 of our competitors that operate in the space, and they found that we were providing them the best performance, providing them the best fault tolerance and scalability, and strict SLAs that were required by the regulator in their case, and that's how we won this contract. They did the test with us where they had about 1 billion transactions per second. And they also ran this on a relatively cheap technology. From the hardware perspective, they had about 10 Dell R610 blades with 1 terabyte of memory, which cost them about $25,000 for this pilot project. And like I said, they were able to process 1 billion transactions per second. I think this was a real incredible outcome, and no questions were asked after that. They wanted to go ahead and implement our technology. We have an article from Herman Graph, who is the CEO of Burbank, who basically validated this whole process and said that yes, New's Burbank IT plan was to create a platform that enabled the bank to introduce new products in hours very quickly, having access to customer information, having access to lots of other information, and process the transactions very quickly, very flexibly, very cheaply. And they looked at our system and they chose it over Oracle, IBM, and others because they felt that the amount of performance that they've gotten from this was unprecedented. This is from another industry. This is from Silver Spring, this use case, which is a sort of Internet of Things vendor that utilizing Internet of Things technologies for their smart metering. They basically put in those smart meters in various places, and they have access to them, and those smart meters will display information. There's no need to send an operator or a manual person to go in and collect the readings. All of this information can be read remotely through networks, and they have more than 50 million smart meters, and they collect this information in real time, and they produce reports, bills from this information, a lot of other statistics, and they use our in-memory processing system as well to kind of quickly have access to all this information. The last case I wanted to show you is from Newegg.com, which is one of the largest online consumer electronics store. Basically, they also were looking for real-time access to the system from millions of their customers in any time, real-time, 24/7, with some analytics being done on the spot, right? They wanted to see, okay, if somebody already looked at something or somebody ever bought something, all this information had to be available in real time as the person was logging in and looking for something. The suggestions, the information, a lot of other stuff had to be available, had to be pulled up and analyzed and reformatted and represented maybe in a different fashion. And again, they've done the evaluation. They found us to be a best fit for them. So from very large providers, some of the largest banks in the world, to some of the smaller, electronics providers, online platforms are using us when they need to collect a lot of information, when they need to process this information quickly, when they need to, transact quickly with their clients. Well, I think now is the right time, as we can see that cost of RAM is being reduced significantly. It's getting somewhat closer to the price of disk, or maybe slightly more expensive, but still to the level that's affordable for most companies. I think it's now is a good time to say, well, can we pay a little bit more money, but getting hundreds of times of performance for our applications? That's where we feel that we actually get the best outcomes in those very high performing environments, lots of transactions, or very heavy analytical environments where you need to analyze, we need to do mathematical models, you need to do your computation on the data in a very fast fashion. There's some marketing material here about how cool we are, that we're a cool vendor, that we're a great private company, but what I wanted to concentrate, we don't have that much time left, but I wanted to concentrate on a little bit on the actual platform, what it is, what it does. So basically, it's a GridGain Enterprise Edition is based on open source Apache Ignite, where we feel that it's a best approach. The open source helps us to provide an easy and cheap entry point for learning, testing, non-critical use of data, lots of contributors, lots of committers, global approach, not single country owning the product, or not single company owning the product. So we were behind this Apache Ignite, but we allowed it to go into this free flow movement to sort of bring in those advantages of being an open source product. But we also felt that some of our customers required more than just the open source. They wanted a company behind us. They wanted certain enterprise class features to be available with that open source product. So we kind of merged the two worlds together. So we provide high-performance distributed platform for computing and transacting on large-scale data sets in near real time. And as you can imagine, this is probably the best environment for spread betting. As we said, you're dealing with lots of data, but you also need to work with it fast in real time to make certain actions. So we are providing for high-performance computing environment, in-memory processing, scalability, high availability, real-time analytics, big data analytics, fault tolerance, different complex event processing, as I mentioned earlier, different algorithms and data structures, right? All of that is really useful for any process that is that requires lots of transactions, that requires heavy analytics and near real-time responses. That's what we believe we can provide. We also support any kind of languages or data formats connecting to our architecture, like Java, .NET, C++, SQL, some of the unstructured databases. And the benefits are clear. Very high throughput, relative low latency, scalable system, the highest availability possible amongst our peers in the industry, fully financial compliant transactions, which are really important. If you're dealing with financial applications, you're aware what that means. You want to record different breakpoints, different states within your transaction, so you know where to roll back depending on where the failure might occur in the process. So we fully compliant with that, and together with the high availability features, we believe that we've got a very effective system there. We also allow persistence, so if you wanted to save your data onto storage, you can do that without affecting the actual performance of the in-memory computing. And then we also provide full suite of security that's required for anything that, again, deals with financial transactions. So again, just to summarize, so GridGain Enterprise is based on Apache Ignite, which is open source, and obviously we support everything Apache Ignite supports because we were behind company behind the Apache Ignite. So obviously all of your clustering and grading and in-memory streaming, all of this is available out of the box. But we also provide the additional features, additional enterprise features like management GUIs, enterprise level security, updates, data center replication, enterprise level support 24/7, enhanced security features. All of that is available with our enterprise edition, which most of the corporate entities buy from us. And some more analytical validation here that we are a great company to work with, the truly innovator, and when compared with peers, we are the best company. So that's just my view on what GridGain can do for this particular aspect of financial services industry, spread betting. Like I said, it's still growing, emerging trend, but it's picking up. And it's not that much different from other financial applications, other financial use cases, but still requires that 24/7 transaction heavy and analytics heavy emphasis, and the technology that can support that paradigm. Thank you so much. If you have any more questions, I'll be more than happy to answer questions.
Hi, Eric. Okay, audience, if you have any questions for Eric, go ahead and enter them in the questions panel in the GoToWebinar control panel. Well, there are no questions so far, but let's give people a couple seconds. And I just want to make the audience aware that we are going to be continuing our financial services webinar series throughout 2017, and some of our upcoming topics, which we'll be posting very soon. Eric, we're going to have one on Bitcoin and blockchain, December. And also we're going to have one on asset and wealth management. And then we're going to talk also, we're going to get very specific on retail banking and innovation using in-memory computing. So those are three that are coming up in the future months. And we'll have the Bitcoin and blockchain one posted pretty quickly, probably this week. And our date for that is going to be December 13th. Anything you wanted to add, Eric?
No, I think that's all of those are emerging trends, emerging technologies, and we believe that we can also take advantage of them, as they also will need that type of scalability, performance, and enterprise security and other features that we can provide with our system.
Okay, well, it looks like there aren't any questions, so Eric, you must have done a pretty thorough job. Thank you so much, audience, for participating today, and Eric, thank you for presenting today, and we hope to see you on a future webinar. Everybody take care, and thanks again, Eric.
Thank you. Take care.